All right, let's jump right in. When we talk about generative AI, the conversation is almost always about software. But that's only half the story. At its core, this is a thermodynamic crisis. It's a pure physics problem, and it is forcing a huge $250 billion infrastructure supercycle right here in India.
Okay, so let's get into the physics of it. A typical legacy cloud server rack, it draws maybe 3 to 6 kilowatts of power. But the kind of intense computing AI needs is just blowing those numbers out of the water. We're seeing this massive explosion in rack density, from 15 kilowatts today with a clear path to 600 kilowatts and maybe even a whole megawatt per rack. Now, what's really fascinating here is that red line, the thermodynamic breaking point. That is the hard physical limit where old-school air conditioning just can't get the heat out fast enough. It is physically, mathematically impossible for legacy air cooling to handle this much concentrated heat.
So when you hit a physical crisis like that, how does the market respond? Well, the core $25 billion in CapEx just to build the data centers, that's just the spark. The really crucial thing to understand is that this one investment triggers a support ecosystem that's 10 times larger, a whopping $250 billion. And why is that? It's because of a massive power deficit. India's data center demand is on track to hit 5,000 megawatts by 2030, and you've got these non-negotiable carbon mandates from the global hyperscalers. They need pure, physical, green energy. No way around it.
And this slide really nails that structural pivot. We're moving away from the old way of doing things, grid power, plus some financial green credits, which are basically just paper offsets. The physics of AI demands a whole new reality, 24/7, dedicated, round-the-clock, or RTC, green power. This isn't a choice anymore, it's a hard requirement. And that means you need gigawatt-scale battery energy storage systems, or BESS, and a complete overhaul of your cooling, from air to these advanced two-phase immersion systems.
Okay, so to really get a handle on the investment landscape here, we need a solid framework. We're going to break this whole supercycle down into 4 very distinct layers of the value chain. Think of them as the 4 pillars that are going to be required to power India's sovereign AI ambitions.
Let's see how this all fits together. It all kicks off with the upstream. That's the physical creation of green electrons from solar and wind. Next, you've got the midstream, which is the absolute critical connective tissue to get that power across the country. Then there's the downstream, which is where the power actually gets used and optimized with all that specialized cooling inside the data center. And finally, holding it all together, you have the enablers, the specialized capital and the smart grid tech that finances and balances this whole complex system.
So diving into the upstream, you're really seeing 2 different strategies play out. On one side, you've got Reliance Industries with its massive INR 7 lakh crore pivot. They're building a totally vertically integrated quartz-to-module supply chain, all to power their own 1 gigawatt AI-ready campus in Jamnagar. Then on the other side, you have a player like Adani Green Energy, who's acting as the big utility-scale provider for hyperscalers like Google. What's interesting is that both are protected by some pretty serious tariff barriers, which shields domestic players like Wari Energies and Borosil Renewables from the shocks of the global market.
Now, the midstream, this is where things get tricky and where you find some critical choke points. This map really shows the problem. Your best solar and wind resources are out in remote deserts, but the data centers have to be in coastal cities for fiber optic access. So how do you bridge that gap? Well, Power Grid Corporation is stepping in with a huge INR 2 to 2.5 trillion capex pipeline to build out these ultra-high voltage DC transmission lines. And that's just not possible without the vital 800-volt DC conversion tech from companies like Hitachi Energy. That tech is what minimizes power loss over these huge distances.
Downstream, the whole opportunity is really being driven by that thermodynamic crisis we talked about earlier. The move from air to liquid cooling for these incredibly dense servers, that's creating what's estimated to be a $2.5 billion market. That's a huge tailwind for industrial engineering firms like Voltus and Blue Star. But software is also becoming absolutely critical here. A platform like LTTZ's Avertal actually uses AI to do predictive maintenance on cooling systems, which guarantees the zero on-plan downtime that these facilities absolutely have to have.
Let's be clear, this entire $250 billion build-out simply doesn't happen without specialized financing and a ton of data. And that's where the enablers come in. You've got specialized non-banking financial companies like IRETA, REC, and PFC putting up billions to underwrite the grid. And then on the data side, you have a company like Genus Power, which has rolled out over 26 million smart meters. That real-time data feed is the only way the grid can possibly balance itself against the massive and often unpredictable power draws from AI workloads.
Okay, so looking forward, this whole theme is about to hit a massive inflection point. There are three very specific catalysts that are all lining up to just dramatically speed up capital deployment between 2026 and 2028.
First up, sovereign AI mandates. The government's $200 billion policy push is all about localizing compute. This is going to force the hyperscalers to build here, which legally means they have to procure massive amounts of green energy. Second, those thermodynamic walls we talked about, they become absolute, forcing a mandatory retrofit cycle to liquid cooling across pretty much all existing data centers. And third, L-cost parity. As these huge battery gigafactories finally come online, the levelized cost of storage is going to plummet. And that right there is the key that unlocks true physical 24/7 green power purchase agreements. It's what makes them economically viable for the first time by solving the whole intermittency problem with solar and wind.
So the big question is, how do you get exposure to this? For retail and institutional investors, trying to pick single winners in such a complex value chain is really tough. So let's take a look at how you might approach this through the Indian mutual fund landscape, which helps spread out that concentrated single-stock risk.
This table lays out three pretty distinct strategies. You've got the Nippon India Power and Infra Fund, which gives you broad exposure to that core midstream, with big holdings in companies like Reliance and L&T. Then there's the ICICI Prudential Energy Opportunities Fund. It's a more aggressive, pure play on energy generation with a lot of weight in NTPC and power grid. And finally, you have the Quant Infrastructure Fund. This one offers a really dynamic, high-conviction approach, taking big, concentrated positions in players like Adani Power to try and capture that high beta growth of the build-out.
So, let's pull this all together. The main idea here, the core thesis, is that we're seeing a fundamental shift in focus, away from the AI software itself and onto the physical, industrial infrastructure that actually makes it all possible.
So if there's one key takeaway, it's this. A multi-gigawatt data center is no longer just an IT asset. It's an absolute energy liability. The lasting economic value from the AI revolution won't only go to the software firms. It's going to be captured by these pick-and-shovel companies that are physically building the ecosystem, all protected by what you could call sovereign moats. From the specialized glass made by Borisol, to the grid wires managed by Power Grid, and the predictive software coming from LTTS. These are the companies that generate, transmit, and cool the green electron.
And that really leaves us with a final thought to chew on. As these two worlds, digital compute and physical energy, permanently fuse into one, the question isn't if this supercycle is going to happen. The real question is, where will the next critical bottleneck, and with it, the next massive investment opportunity show up?